Us to look at the flows and the momentum. Did it shift majorly today, KG, or is this just a little two-way participation that was overdue?
Yeah, I think we're just seeing a little bit of a pullback here. Now, obviously, those puts that we saw yesterday are now most likely profitable today as we are seeing the market pull back. But today, on an intraday basis, you're also seeing a fair amount of call premium being sold pretty much at the levels that we saw earlier this morning. So that's something to also kind of keep in mind. It makes that 5,600, 5,620 level a little bit harder to break through. Now, maybe we could do that tomorrow with some good news from Jackson Hole, but it does set up for a little bit more resistance. It's nice that we actually did see a little bit of a pullback. We had a channel that we were up in the seeing up to the right here. If you're looking at the open interest chart, that we did actually break today, and we kind of talked about the breaking of that channel could be something that does signify a little bit more of a pullback that could be in place. Now, the levels haven't really changed that much, Oliver. In fact, if you kind of look at the 5,600 level, that is kind of our positive gamma level right now, but I didn't want to relabel it because obviously we have a big event tomorrow. So we have a massive spike to the upside, massive spike to the downside. So I think perspective is really key here. 5550 is going to be the one that for us to be able to hold, not only for tomorrow, but also for next week. That could actually create that catalyst for a move to the downside here for us to actually get to that 5,500 level. That's not really what you want to see in the near term. You kind of want us to see a little bit of a pullback, but then obviously grinding up a little bit higher. Puts are catching a little bit of steam here, but you also have to say the call sellers, those that are trying to get premium in this market right now, were also out in force today as well.
Okay, so then that maybe creates a situation where if we break back to the upside, call sellers kind of get pinched. Maybe this means we're just headed for a little bit of a magnitude, perhaps, tomorrow going into next week. Maybe we get a big move tomorrow in one direction or the other.
I mean, we will see. Usually when you see this type of a lead up to an event, Oliver, you have a buy the rumor, sell the news type of situation that does occur. Now, outside of the options situation here, you got to think to yourself, what could Powell say to really move this market to the upside that we don't already have priced in? And on the other side of that, what can Powell say that is bearish that really bring this market to the downside? I think there's probably more downside risk than upside potential right now, just because I don't see anything that they can really say. And then when you're seeing some of the flows, especially for today, if we're looking at that volume chart, we actually had a significant amount of call selling and premium selling at the 56.25 and the 56.50 level here, expiring on September 20th. So this is not something that's just expiring tomorrow. This is something that's expiring later on here. And now this histogram is also kind of showing the fact that we're in negative gamma when you're looking at it from a volume standpoint. Obviously, that's putting some pressure on the dealers to the downside. Our negative gamma area right now for volume is sitting at 55.70. You want to be able to hold that for right now. Positive gamma right now is sitting at 56.20, but before we even talk about 56.20, we have to get above 55.80, and that's actually a near-term resistance that we just tested over the last hour and failed. And now we're going to have to try to retest that level, try to break through. But right now, it's more downside pressure than upside momentum that we're seeing. Also on this chart, what I wanted to highlight too is this channel line to the downside, leading us to the 55.50 area. The put flows have been strong not only yesterday, but today for 55.50 puts. Is that going to come to fruition? Are we going to actually hit that level? And when we hit that level, do we see those put buyers actually then selling those puts, alleviating that pressure from the dealers, and dealers come in and actually pull up and actually buy back their futures contracts? That's kind of the dynamic that we're in. Downside pressure, but if we don't really break this downside really quickly, we could actually have a melt-up scenario that does take place. You would want to see us hit 55.50 first in order to really try to do that, though.
All right, so we should have a little bit of, I mean, we should have some support that holds up pretty good.
You would hope.
Like 55.50.
Yeah, 55.50 is going to be your area, right? So that's the area that you really want to focus on here in the near term, especially for today. What I will say is that the rapid move to the downside has not been really met with a lot of aggressive volume. And when I say aggressive, you're talking about 50% over the average volume that we've seen over the last 5 days. That's just something that's not occurring right now. If you're matching it up with the S&P 500, there is liquidity that is being drawn out of the market over the last couple of trading sessions. Nothing aggressive, but if we start seeing liquidity continuing to move to the downside, the risk of us actually breaking that 55.50 and us continuing to go down is a lot higher. And I'm not saying that that's the environment that we're in yet, but over the last 24, 48 hours, we've seen VIX up, SPX up, as we talked about yesterday, liquidity going in a little bit lower, call selling pretty much at the money calls, which is something you really don't see for an institution that's taking in today around 58.4 million in premium, just those two trades alone at the 56.25 and the 56.50 levels. All of that kind of says near-term pullback for now. That's really the setup. Unless we get something that's really good news to try to break us higher and we get this squeeze above 56.25 tomorrow, this looks more like compression, if not, once again, minor pullback. Nothing right now that says it's going to be catastrophic, but healthy nonetheless.
Okay. And then we'll also be watching that liquidity function to see if things remain healthy or not. It seems like for now it's still decent after recovering.
It is. And the reason why I wanted to kind of bring up that chart here today is just to show that it's a little bit of a pullback when you're looking at depth, a little bit lower depth here right now. But sometimes when we kind of see those type of reactions, we can kind of shrug it off and it just accelerates. And so what I'm just saying is, put it on your radar for now. We are seeing a little bit of a curve to the downside. If it does accelerate and those spreads start to widen out, which is that purple line, that's when you get gappier type of markets where you can have substantial moves to the upside or downside. And that's where we can have higher volatility as well. Lower volatility or lower liquidity, higher vol is usually the correlation that we see.
Makes sense. All right. So we're losing a little bit of it here as we see both ends of that come in. We're going to have to get a different color on that thing. That pale yellow ain't going to cut it. Thank you, Kevin Green. Good eyes yesterday on the VIX up, stocks up, being a little bit of a threat. And indeed, stocks under threat today.